interest on borrowed capital. So deduction is equal to interest amount of loan multiplied by rate of interest per annum without any limit if property is laid out. From when? Interest relating to the previous year of completion of construction can be fully claimed in that previous year, irrespective of the date of completion. Means purpose loan can be taken for acquisition, construction, repairs, renovations, reconstruction of house property. So loan should be taken only for this purpose. And accrual. Deduction under section 24B for interest is available on accrual basis. Thus, interest accrued but not paid during previous year can also be claimed as a deduction. Like in municipal tax, when it is paid only, then deduction is available. But here, if it is not paid, but if it is accrued, then also deduction is available. So that is the difference. So that is about interest, current year interest. So current year interest is fully allowed as a deduction. Now, what is deduction? Pre-construction period interest. Deduction pre-commencement interest is allowed as a deduction in 5 successive previous year starting from the previous year of completion of construction, that is 1/5 of the total interest. Now that we have to understand with one example, then only you will in a position to get the answer. Meaning pre-construction period means period during which loan was taken but the construction of house property was or could not be started. Pre-construction period means start from the date of borrowing and on 31st March immediately prior to the completion of construction and date of payment of loan, whichever is earlier. That we will understand. Now note, interest will be aggregate from the date of borrowing till the date of the previous year prior to the previous year in which house is completed and not till the date of completion of construction. Now from for understanding all these points, we will take one example so that you will get complete understanding of the point. Now step for computation of period prior period interest means pre-construction interest. Step 1, identify the date of borrowing of the loan. Means first of all, let us keep in mind this question. If Mr. X had taken a loan of rupees 5 lakh for construction of the property on 1/10/2020, so what is your date of borrowing here? From this sentence we will get date of borrowing. So what is your date of borrowing? 1/10/2020. Now interest is payable at 10% per annum and construction was completed on 30 June 2021. So second point is what? Step 2, identify the date of completion or acquisition. Means in this case you have to identify the date of completion and acquisition. So your date of construction completed on 30 June 2021. Now, third step, identify the last date of financial year immediately preceding the date of completion or acquisition. Means completion is taken place on 30 June 2021. From that date, you have to find out preceding year financial year. Means financial year, the last date of financial year immediately preceding the completion of construction. So you have to go back. And in that case, if you go back, in the previous year, preceding previous year, in that year you have to find out when 31st March will come up before this date. So 31st March 2021 will come. So this is the answer of step number 3. Identify the last date of financial year immediately preceding the date of completion or acquisition. So from this date you have to go back before and you have to find out which 31st March exactly come before this date. So 31st March 2021 will come. Now step number 4, prior period is equal to period calculated from step 1 to step 2. So what is your pre-construction period? So pre-construction period starts from 1st October 2020 to 31st March 2021. So this is your pre-construction period. Now, fourth step, prior period interest means prior period as per step number 4. That means this is the prior period multiply by rate of interest and amount of loan. So what is the amount of loan here? So amount of loan is 5 lakh, that is given in the example. Rate of interest is 10%. It is mentioned 10% here. So multiply by 10%, multiply by how many months? So if you calculate these months from 1st October to 31st March 2021, you will get 6 months from 1/10/2020 to 31st March 2021. So now you have to calculate interest for the 6 month. So prior period interest. So if you calculate 6 month interest, 6 divided by 12. So by putting all this answer, you will get the answer. So allowable prior period interest is equal to, now how much is allowable? Step number 6 is very important. Whatever interest you got, let us, you have got 25,000 here. So this 25,000 is divided by 5. So 5,000 is available in the previous year when construction gets completed. That means from 1st April 2021 to 31st March 2022, this is the first year in which you will get this 5,000. But remember students, current loan is right now not finished. Let us say that in this example we are assuming that loan is repaid on let us say 31st March 2030. That means in current year also loan is continue. That means in current year normal interest is available as a deduction. So now by keeping all these steps into the mind, we will start the calculation. So number one, current year interest. So first of all, you have to find out current year interest. Interest for previous year 2021-22. So 10% of 5 lakh, that is 50,000. Now pre-construction period means already I explained you. Date of borrowing to 31st March immediately preceding date of completion. So date of borrowing is 1st October 2020 and 31st March immediately prior to the date of completion of certificate. Completion of construction is 31st March 2021. Now in that case, here there is a printing mistake. 31st March immediately preceding 20 June. It is wrong. It must be 30 June because in example 30 June is written, which is 31st March 2021. So pre-construction period is from 1st 10 2020 to 31st March 2021. Now pre-construction interest is equal to 20% of 5 lakh for 6 months, because if you calculate duration from 1/10/2020 to 31st March 2021, you will get 25,000. Now this 25,000 will be divided into 5 equal installment. So prior period interest to be allowed in 5 equal installment, annual installment of 5,000 from the previous year of completion of construction, that is previous year 2021-22. So what is your, therefore what is your total interest of deduction under section 24B? 50,000 plus 5,000, 50,000 current year interest, and this is pre-construction period interest 5,000. So total 55,000 is available as a deduction in previous year 2021-22. So this way you can find out the interest on pre-construction period. So this is the beautiful example by which you can understand how to calculate interest on pre-construction period. You can do the practice by taking different amount, and let us say if this amount is 7 lakh and rate of interest is same 10%, and if your date of borrowing is started from 1st of April 2020, in that case you can do the practice and you can find out the answer. And loan is last installment is repaid on 31st March 2030. So in that case you have to find out the total interest under section 24 which is available as a deduction in 2021-22, that you have to do in yourself, and you can write down the answer in a comment box so I can make a reply whether it is right or wrong. So this is all about pre-construction period interest. Thank you very much for watching my video till end. Now we will discuss some new points for income from house property in the next video. Points to remember: loan may be taken for purchasing the land even if construction is done out of his own fund. Means what? There are certain points that you have to keep in mind while you are claiming the deduction of interest on borrowed capital. That means if loan is taken for purchasing of land, even if construction is done out of own fund, then also deduction is available. Let us say you have purchased a land, on that land one building was built. Now loan is taken to purchase a land. So now whether deduction on interest on borrowed capital is available? Yes, obvious. There is no question in that. If you construct property, then also deduction is available. If you purchase land by taking loan, then also deduction is available for interest which you are paying. Interest on unpaid interest is not deductible. So to pay the loan, you have taken another loan, and on that you are paying interest. That is not available as a deduction. Interest on fresh loan taken to repay the original loan is allowed as a deduction. So interest, to pay the interest if you have taken the loan, then deduction is not available. But to pay the original loan, you have taken the fresh loan, then in that case if you are paying interest, then deduction is allowed. Amount paid as a brokerage commission for arrangement of loan, not allowed as a deduction. So whatever amount you have paid to arrange the loan, or whatever commission you have paid to arrange the loan, that is not allowed as a deduction. If loan is taken from outside India, interest is deductible if tax has been deducted at source. Means if TDS is deducted, so even if loan is taken from outside India, their interest also deductible. Where a buyer enters into the arrangement with the seller to pay the sale price installment along with the interest due, the seller becomes the lender in relation to the unpaid purchase price, and buyer becomes the borrower. In such case, unpaid purchase price can be treated as capital borrowed for acquiring property, and interest paid can be allowed as a deduction. Now what does it mean? Where a buyer enters into an agreement with the seller to pay sale price in installment along with the interest due, means he is agree to pay the seller the amount in installment with interest. The seller becomes the lender. Here seller becomes the lender because he is paying amount in installment for the house he want to purchase, and purchaser becomes the borrower. Now in that case, whether the interest deductible, like Mr. X is selling his house to Mr. Y. Now Mr. Y is paying amount in installment with interest. Now this interest is allowed as a deduction. Yes, obviously this interest is allowed as a deduction to Mr. Y, because in this case Mr. Y is borrower and Mr. X is lender. So that is why the deduction is available as a, so interest is available as a deduction. So this is the extra point that you have to keep in mind while you are calculating interest on pre-construction period and normal interest. Limit on deduction of interest for self-occupied property. Loan is taken for maximum interest allowed. If capital is borrowed before April 1999 for purchase, construction, reconstruction, repairs and renewals of the house property, in that case you will get only 30,000 as a deduction. Here you have to remember, if loan is taken before April 1, 1999 for purchase, construction or reconstruction or repairs or renewals, then amount of deduction in case of self-occupied property is only 30,000. But if capital, and second one, and if capital is borrowed on or after April 1, 1999 for reconstruction, repairs and renewals of a house property, then 30,000 is available. So there are two things that you have to keep in mind. When loan is taken before April 1999, then for whatever purpose the loan was taken, only 30,000 is available. But if loan is taken after April 1, 1999 for reconstruction, repairs and renewals of a house property, then 30,000 is available. But if loan is taken after April 1, 1999 for acquisition or construction of the property, then 2 lakh is available as a deduction. Repairs and or renovation of house property on or after 1st April 1999. That means actual interest payable maximum of rupees 30,000 is available. If loan is taken for repairs and renovation of the house property on or after 1st April 2019, 1999, actual interest is payable. Maximum amount of deduction is only 30,000. But if loan is taken for acquisition or construction of house property on or after 1st April 1999, and such acquisition or construction is completed within 5 years from the end of the previous year in which capital was borrowed, means maximum of 2 lakh is available as a deduction. In that case, if you have acquired the property after 1st April 1999, or you have constructed the property and construction is completed within 5 years from the date in which from the previous year in which capital was borrowed, then 2 lakh, maximum 2 lakh is available as a deduction in case of self occupied property. This all provision is about self occupied property, not let out property. In case of let out property, full amount is available as a deduction under 24B, but in case of self occupied property there is a limit, maximum limit of 30,000 and maximum limit of 2 lakh. If it is loan is taken on or after 1st April 99 for repairs and renovation, maximum limit is 30,000. If loan is taken after on or after 1st April 1999, and if or for construction and construction is completed within 5 years from the end of the previous year in which capital was borrowed, then 2 lakh is available as a deduction. Now above mentioned limits are applicable combinedly for two self-occupied property and not for each self-occupied property. Means if he has a two self-occupied property, that doesn't mean he will get a 2 lakh plus 2 lakh 4 lakh. He will get only 2 lakh. Maximum 2 lakh is available as a deduction. No such limit is applicable in case of let out property or deemed to be let out property. So if this limit is not applicable in case of LO or DLO, let out property or deemed to be let out property. So now Mr. Manas owns two houses at Bombay, wherein his family reside, and other at Delhi, which is unoccupied. So this is the one example that by which you can clarify your doubt. Mr. Manas owns two houses at Bombay, wherein his family resides, and other at Delhi, which is unoccupied. He lives in Chandigarh for his employment purpose in a rented house. So he is living in a Chandigarh. So he has already two houses, one at Bombay, other at Delhi, but he lives in Chandigarh in a rented house. For acquisition of the house property at Bombay, he has taken a loan of 30 lakh at 10% per annum on 1/4/2020. He has not repaid any amount so far. So he has not paid any amount so far. Irrespective of house property at Delhi, he has taken a loan of 5 lakh at 11% per annum on 1/10/2020 towards repairs. Now compute the deduction which would be available to him under section 24B for the assessment year 2022-23 irrespective of interest payable on such loan. Now Mr. Manas can claim both the house as a self-occupied property, and thus annual value of both the house will be nil because he has only two houses. And according to the rule, if in both the house, if it is occupied by he or himself or his family member, then it is considered a self-occupied property. So it is Mr. Manas own two houses at Bombay, wherein his family resides, and other at Delhi. Okay, so now which is unoccupied. That means he has not let out this property. That means it is considered a self-occupied property because up to the as per the rule, two houses can be treated as a self-occupied property. If he has three houses, then two houses can be treated as a self-occupied, and one houses can be treated as a deemed to be let out property. But that is not the concept. So interest on loan taken for acquisition of residential property, house property, 30 lakh into 10%, that is 2 lakh. That means he has taken loan of 30 lakh on 1/4/2020 from the starting of the year. So full year interest is available. Now interest on loan taken for repairs and residential house property at Delhi, 5 lakh into 11%, that is 55,000 for the full year. Let us say on 1/10/2020. Now our previous year is 21 1st April 21 to 31st March 2022. So obviously this loan was taken before 21. So full year interest is available as a deduction. So here interest is 3 lakh, but it is restricted to 2 lakh. Then interest loan taken for repairs of residential house property at Delhi, 5 lakh into 11%, that is 55,000. But if loan is taken for repair purpose, then it is restricted to 30,000. You will not get full 55,000. So again 30,000. So if you make total of these two, total is 2 lakh 30,000. Again, total interest is 2 lakh 30,000, but you will get deduction under section 24B, irrespective of 1 and 2 both above, to be restricted to only 2 lakh. So you will get maximum deduction of 2 lakh. So for the first house which is located at Bombay, you are getting 3 lakh, but more than 2 lakh it is not available. So answer is 2 lakh. In second house, maximum limit is 30,000 and your actual interest is 50,000, 55,000. So you will get only 30,000. So your total is 2 lakh 30,000. But again, 24B is allowing interest of maximum of 2 lakh if property is self-occupied. But let us say in the same example, if property is let out, both the property is let out, in that case, what is the maximum interest that is getting? So total interest 3 lakh plus 55,000. So 3 lakh 55,000 will be available as a deduction if property is let out. But if property is self-occupied, then only this concept that limit is applicable. Otherwise, limit is not applicable.